So welcome to the ASX Speed webinar for today, which is the wonderful day of Monday, November 12th, 2018. We have short-term bear pause warnings in the following Australian shares. GPT, General Property Trust. NWS.ASX, News Corp. ORI.ASX, Orica. QAN.ASX, Qantas. WBC.ASX, Westpac. WOW.ASX, Woolworths. We can see on the weekly charts that Woolworths had a good start the previous week, and so it probably peters out somewhere just above $30. If it can get some momentum, expect $31.81. Traders time frame, Colin. $29.78 looks like the area that if you were long and you wanted to take some profit, you would do so. Full stop, new line. A decline probably should come back down to about $28.45. Now, Qantas on the intermediate time frame has hit something on the rally. It also hit something on the downside. Full stop, new line. Currently, the rally lacks the volume, so we would expect it to go lower, down to $4.66 or $4.10 or even $3.27. So I think this bear pause warnings is valid, and you might even want to short. With a stop loss above $6. And if you think Peter Gregg did dodgy stuff when he was working for John Holland Constructions, you probably got to look really closely at what he did in Qantas, and I know it's dodgy. Has to be. It's Peter Gregg. News Corp heading up into the zone here. So News Corp is on bear pause warnings. Volume was not sensational, so it should have problems up to as high as $20.50. We see on the weekly chart that it actually landed on the right retracement, but it's not enough in my opinion because volume does not back it up. We have short-term bullhorns warnings in the following Australian shares, new line. JHX.ASX, James Hardy. STO.ASX, Santos. Energy prices are falling so hard that Santos is simply not trustworthy in terms of a short-term bullhorn warning. And speaking of untrustworthy, Goldman Sachs is telling us that crude oil and energy prices are going to the moon, and that there's a huge lack of supply, full stop, new line. I think there's a large lie in that from Goldman Sachs. We have already discussed James Hardy the other day. As Kevin says, to the moon via the floor. Such crapheads, those people. Such craphead liars. Or either that or they're just stupid wankers. I probably have to think they're more stupid wankers that just manage to get themselves polished up enough so that people believe them. They always seem to be offering the worst advice to people. But people love paying the most, don't they? Okay, so let's look at the wedgies. Now, these wedgies come with a warning. Warning. Not so reliable today. I'm not happy with the way that this was received. Nonetheless, I'm presenting them to you. JB Hi-Fi, Orocobre, Syrah, Galaxy. That's interesting, isn't it? That's 3 lithiums, isn't it? Ingham's Chickens, don't love them at all. Invacare, Domino's Pizzas, the famous dump. BWX, IOOF Holdings, NextDC, CSR, Metcash, Speedcast, G8, 9 Entertainment, very ordinaries, Hardly Normal, Maya, Bellamy's, New Farm, Nanosonics, and Kidman Resources, which I think Kidman's also interesting. Now, NextDC actually has a business and sells stuff. I'm not sure about the lithium makers or pretend miners, but let's have a look at NextDC. Cindy will be chirping in because we're talking lithium. A lot of people calling oil to 100. Well, that's just frogs droppings, isn't it? Really, frogs droppings. NextDC, $6.36 is the spot. So NextDC. I think this is the one to be interested in. NextDC, we see it jumping around. It should have gone down to $5.59. I believe it pays a good dividend. And at the moment, if it clears through $6.40, get excited in the medium to longer term. The stop loss would be below $6 if you were buying it. And on the trader's time frame, it also needs a breakthrough $6.42. Let's buy this on a PHG trade with a stop loss below $6. or buy dips down to $6.13. So, okay, it was paying a dividend before, or did it not? Or is my memory flawed? I thought it was doing reasonable business. Charles, was it paying a dividend before, or did they just stop it? Oh, they're making, or has their business changed? It sells service space, still growing, have not paid dividend. Been looking into it for 2 years, no dividend in that time. Okay. Well, then that's off the PHG trade list because I want to buy something that's giving a return. That's a bit sad. Not a PHG trade. Thanks, Charles, for that. Oh, okay. I'm confusing that with data 3. Okay. That's where my brain is. Sorry. And thank you for Charles keeping it good. Okay, so let's go into. Is there any other wedges of interest? Let's move on and get into the normal stuff so Kevin can be happy. Got to see Kevin happy today. It's remarkable how much this jumps around a bit. Okay, let's go in. All Ordinaries Index. The All Ordinaries banged into the Fat Controller, and the Fat Controller basically says look for 59.16 on the downside. Supporting my theory that I gave on Friday is the fact that the US market fell over a bit, and so today will struggle a bit. You will notice that seasonally it does like to, on the ASX, drop down a little bit further. Until around about the 23rd of November. So it's not surprising that it may just peel back down towards 5,800 even. Now, here's Ripley's, believe it or not, the financials are actually stronger than the entire index. Full stop, new line. This is because they are cheap and laden with dividends, and they only copped smacks in the head of $300 million per bank. Which, when you're doing $7 or $8 billion worth of profit every year, is not all that much. Or is it every year, or is it every 6 months? Question mark. Whatever it is, they make a shit ton of money, and 300 million is a drop in the ocean. ANZ, there is no change to the analysis on the investor's timeframe, other than to note that it breaks up nicely above $29 and shifts a gear up. Jason is saying, yes, but the compliance cost of restructuring to the new rules will cost billions. I can't imagine compliance will cost that much. I know it's an unnecessary drain on any business just to create jobs for lawyers, but I don't. It's not going to cost billions, Jason. Really? Where do you get those sort of numbers from? I think the real drain is in the banks, is that they've stopped lending on properties, which has probably saved them from people who are going to kill themselves when as the property market is falling. I think 47% clearance rate in New South Wales last week, but at least the properties are starting to sell, and the Chinese are back. There was quite aggressive Chinese buying in Melbourne on the weekend in the properties that a couple of people were at. So the Chinese have spotted a bargain in terms of prices. They think it's probably bottoming. On the intermediate time frame, we see $27.71 as the target area. Getting above $28 puts a smile on the dial. Full stop, new line. If you are long, have a stop loss below $25 and 85 cents adjusted for dividends. And I guess the adjusted dividend would be about $1.20 off price. And undoubtedly, there is a shadow lending market of non-Big Four banks. Now, Jason is saying that he is short ANZ, and the stop loss I would employ, as I just said, would be above $28 because that's where it breaks out, or above $27.60, full stop me line. Where I would take profit if I was short, would I take the profit back at $26.42 and $26.15. And you would adjust for dividends, as I said before, by some $1.20. Charles is asking about the shadow lending market like in China. And China owns Australia anyway. If you go down Anzac Parade in Sydney, there's a whole stretch of road there that's with derelict buildings. A Chinese gentleman who owns a cigarette factory or large cigarette factories in China. So he's a nice person. He likes to kill people. He bought the property next to the AJC, I think, for $13 million. And then the New South Wales government decided to put a train station that will never actually get trains to it down next to Randwick Racecourse. And then within a year, bought it back from him for something like $60 million, for $60 million. And then he just bought up the stretch of road between, I think, Duke Street and I can't remember the street, but it's a long stretch of buildings up to close to Peters of Kensington with that money, and he's just sitting on it. So Westpac goes ex-dividend tomorrow, but anyway, let's talk about CBA. On CBA, the balance of power has started to simply break up above, is on a break up above $72. Then we're looking for $75.49. Currently, if you're long CBA, have a stop loss below $67. On the weekly charts, we see $71.60 as the next target area for it can pop its head above $71. Currently, you should have a stop loss below $67.72. Have a stop loss below $69.45 if you are long CBA on the trader's time frame. Volume is reasonably good, and it is a preferred bank because it's not going ex-dividend. It's going to start to build dividend payments to customers. NAV on the traders time frame is a little bit confused. We would normally expect it to probably break down below $24.63 and head lower as they sell out of NAV and buy into CBA. I have really nothing to add on the intermediate time frame and monthly charts. Westpac is going ex-dividend tomorrow to the tune of 94 cents, which gives you probably about $1.25 that you should shade your orders by. Now I will be doing all orders according to the price that I see. At the moment, it's rallied back into an unfortunate resistance point, and really I'd like to see it get above $28.50. On the intermediate time frame, it normally has some weakness until the 23rd of November and even middle of December. Full stop. You can see that on the weeklies, it's hit resistance on all of those lows, so it really needs to close through $27.90. So that would be your stop loss if you were shorting it, Jason. Your buyback area would be around about $26.72. On the traders time frame, we see a bit of doji and confusion, but we also see that it could go down to $27 and still start up again. So shorts put on should be short-lived. Chinese iron ore is still doing very well in terms of price action. It is exceeding my expectations. Generally, at this time of year, it's a little bit under the weather in terms of the materials index. So we might expect to pull back down towards as low as 11,417. It's going to be hard to see big collapses while iron ore prices are doing so well. Now, BHP in the US fell down a little bit overnight. It possibly is due to a currency retracement by the Aussie dollar against the US. On the traders time frame, it really hasn't known what to do with itself. If it gets above $34, then that's fantastic. A pullback down to $32.63 would be normal. And on the weekly charts, normally it drops down into mid-December and has a low 23rd of November as well. So we don't want to rush out and buy, but it's hard to short it. On the traders time frame, it's in an expanding triangle, so it could go anywhere. Rio is breaking up on the monthly charts. It's reached a bit of resistance area. It's done kind of what we thought it should. And if it pushes through $83 again, it is very good. A break up on the weekly chart would suggest $85.16 and $87.94. On the traders time frame, we've seen a dip on a bit of volume decline. So it's back on the old top. So if you wanted to buy this, you'd buy a break above $81.90 with a stop loss below $80.87, looking for $85.16. On the investors time frame, we see a bit of break up in Fortescue. We can look for $4.49, but we pray and hope it gets above $4.66. The weekly charts really require it to get a hurry. A close above $4.30 would be encouraging. At the moment, I wouldn't rule out a pullback down to $3.99 or $4. Have a stop loss below $3.93. That's where our PHG trade should now be taken to. You might have seen I just adjusted the stop on ANZ because I noticed it. Stop is at $33 now. Sorry, FMG, $3.92. That was already in the right place. We've achieved, haven't achieved those targets. BHP stop is at $33. Let's go back and put those stops in. So we've been stopped out on BHP. Stopped out exclamation mark for a profit. Rio, we're going down here to 80 20 stop close only. Let's just put in Rio quickly, so you know some of these are open. And 78.28, 26 is the close. I don't get that. Okay. Bring it up to $80. Price stop and leave the stop close only as, oh, actually we'll bring that up to 80.50. Achieve some of these. That's good. Good FMG on the traders time frame. Pulling back as expected. We'll just leave it as is. If you feel like taking some profit, it's kind of okay, but I'd prefer a stop loss at $4.15 if you feel the urge to take some profit. And you would buy back in around $4.06. With a stop loss at $3.92. I still don't like the energies index. An energy stock. For Jen. No more questions, thank you. Didn't quite expect so much. I'll have to say no more questions, one eye each time. Thank you. Just my neck is killing me with the position that I'm sitting in right now. Let's see if that does any better. No, it's not going to work. Okay. FAR nearly got to 14 cents, which was our target area, and then it just got booted far down. This would project it down towards the base at 6.3 cents. On the intermediate time frame, Colin, we can see that it has had a death rattle week and broken so much support on big volume that it's ridiculous. You could hope that it rallies back up to 10 cents to get out of jail, but I find that unlikely. Normally at this time of year, it does have a bit of a breakdown and comes good again mid-December. Currently, the price action would be indicating it's going to be confused and churn sideways and then drop again. CVN.ASX, Carnarvon. This is forming some sort of contraction pattern, which may be a base, it may not. At the moment, it's not very clear, but I would say above 40 cents, you start to look for 48 cents and have a stop loss below 36 cents. Did you get your place sold, Adrian? I hope you did. On the intermediate time frame, buy a break above 41 cents with a stop loss below 30 cents, targeting just under 60 cents. Oh, that's true, Adrian, but you traded up. You traded across. You got really good money for your previous house. So you got to think probably that way. Think the glass is half full. And you got good money for your other one, didn't you? Way more than you would have thought. The good thing is it is out of your hair and you can start to split some of that and not grovel. And you're also not giving free accommodation to your wife's boyfriend. It's probably more important. Anyway, ex-wife's boyfriend. Buy a break above 39 cents with a stop loss below 36 cents, targeting 42 cents. Sorry, there was HE8. Sorry, I just I normally can take 2 on this list without having to add lines and stuff. I've got to add stuff. Helix, is it Helix or is it Helio or something like that? Oh, goodness, here I go. Helios. Oh, my neck is killing me when I do this. Investors time frame column. This is still very healthy and looking towards 30 cents or maybe higher. Full stop new line. Have your stop loss below 10 cents if long. This is still very healthy and may go as high as 30 cents. Have your stop loss now below 10 cents. Intermediate time frame column. A good idea to pick this up would be around about 13.5 cents medium term and 14.5 cents shorter term, with a stop loss below 11 cents. Traders time frame colon, buy a break above 16 cents, looking for 18 cents with a stop loss below 15 cents. $0.15. The US gold price is clearly showing my theories are correct, that it is going to new lows. Full stop new line. The swing factor is the Aussie dollar US dollar exchange rate, which improved for the gold stocks. So we don't see them down. There is no trend up, but the general drift is up on the monthly charts. Pick a gold stock. I can't stand my neck. No more questions. EVN.ASX evolution. Stuck in the middle doing nothing for some time. May go down to $2.50, but then that's a buy. A break above $3.25 shows a move towards $3.50. Shows $3.50. On the weekly charts, we see it flagging slightly. So buy a break above $3.17 with a stop loss below $2.95, or wait for dips to $2.87 with a stop loss below $2.76. On the trader's time frame, we need a break up above $3.12 and a stop loss below $2.95. On the trader's time frame, it's flatlining. It should start to do something. What it's going to do, I don't know what. Buy a break above $4.40 or sell a break down below $4.15. You could bracket the market and have stop loss entries and exits on either side of the market. On the weekly time frame, we can see that it is flagging a little bit. Seasonally, it still is weak until mid-December. So don't get too excited. Maybe buy a close above $4.50 if you like this. With stop loss below $4.10. On the trader's time frame, Colin, buy a break above $4.65 with a stop loss below $3.66. The general drift is up, even though there is no trend. The healthcare index found itself into some support. Resistance is at 31,029. The healthcare index found it into some support on the longer term, and the resistance is 31,000 now. In theory, I think we should see it up towards there as long as it doesn't break 27,700. The healthcare stock. Okay, I'll choose one. Blackmores. Actually, Bellamy's fits into there. We'll do Bellamy's. It's a wedgie. Again, what a surprise. I saw Bellamy's is doing apple juice, and it's organic apple juice like everything else. So obviously they are splintering their focus, and that means it probably goes lower. On the intermediate time frame, if it can get the gumption to get above $9.15, then buy it looking for $11.07, or simply wait until it normally bottoms in middle of January. Traders time frame needs to break and close above $8.52 or leave it alone. Or leave it alone. Even though auction rates are low, properties are selling. Even though auction rates are low, properties are selling, and in Melbourne at least, mainland Chinese buyers were back in full force at auctions. They have been keeping their hands off it and not getting involved, but now the prices are down low enough where they're stepping in, and they're the only ones that can afford to buy it because they've got the cash. Yes, it is cash. Big A property stock. So we see the property index getting above the fat controller, which is a good signal, and this probably should return to 1475. Now, Mirvac is on, I think, bear pause warnings. And the best thing I can say is a close above $2.24 is good. If you get a pullback down towards $2.14. That would be an area to buy into with the stop loss below $2. If you buy the breakout, stop loss would be $2.16 if you buy the breakout. Mervac is breaking out, looking for $2.28 on the weekly charts. Stop loss should be about $2.15 if you want to buy it. On the intermediate time frame, on the monthly time frames, monthly charts, looking for $2.28 on the top side. It has recovered after a bit of a shock, probably due to the rest of the market itself, and we should think about it going towards $2.33. REA.ASX has done virtually what I said it should by playing in its range. I'd like to think that it's probably just going to keep in that range for a while. New line. If it breaks $71, then it's in trouble, and it's wonderful if it breaks $94. As you can see, it's bumped into the fat controller, probably comes back down to $75.51. A break above $82 is a good thing. The trader's time frame gives us a little bit of a different perspective. It's in a triangle at present, but the day is not finished. So we should see support materialize somewhere down towards $76.40. So you'd buy there with a stop loss below $75, or you would buy a break above yesterday's high above $81.70. Telecoms index is hanging in there a bit on the daily charts. Above 1150 starts to be good. At least it's not breaking down. At the moment, what we're seeing is just sideways movement, but above 1150, and I like this. This. TLS.ASX, Telstra. Investors timeframe column. Buy a break above $3.30, looking for $3.82. New line, new line. Your stop loss would be below $3. Intermediate time frame column. Buy a break above $3.16 with a stop loss below $2.99. And this week is the time that it starts up and gets stronger from. This is a flag, and the pattern is corrective in terms of volume and price action. We see it target at $3.66 and $3.81 and possibly $4.05. Traders time frame column. Buy a break above $3.11 with a stop loss below $3, or wait. The small ordinaries has run into the fat controller and needs a close above 2700 to continue its ascent. Full stop new line. If you are long, stop loss is below 2640. Small and mid cap stocks questions. No more questions. KDR.ASX, Kidman Resources. KDR.ASX, Kidman Resources. We have been hoping for $1.85, but recognise the fact that resistance is up to $1.73. We also thought that it might dip down to $1.30, which is still feasible, or even $1.12. I'd love this if it closed above $2. On the intermediate time frame, basically $1.30 is also the zone to look to buy into with a stop loss below $1.24. On the traders time frame, $1.36 is the zone. If you want to pick up some now, Cindy, it's in the next 1 or 2 cents with a stop loss below $1.29. And target $1.45 and $1.51. A nice bit of volume went into Linus last month, and it's starting to break up. So if you like this, have a stop loss below $1.80 and look for $4. On the intermediate time frame, Colin, we think about $2.50, $3. Currently breaking up nicely and having a stop loss at $1.96 makes sense. New line. Makes sense. On the trader's time frame, Colin, have a stop loss at $2.15. You will find a bit of resistance coming in at $2.39, so take some profit there. Magellan is just doing what it normally does. MFG.ASX Magellan is just doing what it normally does and has been really just groveling around above $20 for the past 3 or 4 years. Full stop, new line. It needs a stop loss on a closing price basis below $24. On the intermediate time frame, it's had a bit of a drop. Volume is still not good. So a close above $28 would inspire it higher, and a close above $30 is even better. Currently, if long, stop is at $26. New line. On the trader's time frame, buy a break above $27.56, targeting $28.32. Or.ASX or a Cobre. Trader's time frame, Colin. Bit of a double top, so we might think about it coming a bit lower. First instance down towards $4.01, but mainly down to $3.50 again. intermediate time frame, Colin. This is on the wedgie. So if it breaks above $4.70, it becomes a buy with a stop loss below $3.93, hoping towards $6 new line. Investors time frame, Colin. A break above $4.75 suggests $5.25. However, above $5.63, and we suggest higher to the moon. The moon. Currently, volume doesn't agree with it breaking higher and going faster, but if it does get through that barrier, then all is good. Now, we've talked about Woolworths and Qantas today, so we don't really need to do top 100 stocks questions. We've talked about Magellan. It's not the top 100. Okay, let's finish that now. And it's late. It's nearly so good when I'm late because the computer dies. I love that. That's my favorite thing ever. Computer dies, Dragon plays up. I just have a barrel of laughs every day I do a webinar. Now let's go and look at PHG Trades review, see what we've been knocked out of, knocked into, bored by, or disappointed by. So ANZ stop is 25.38. That was a rough back of the pants. Yes, let's see where ANZ landed. It's not a monthly chart. Okay, so that's 25.38, 26.61. Okay, so that's pretty good. It's not as dead as it could be. It's kind of into some support at 25.72. We'll keep our stop loss as is. We're long at good levels previously and got the dividend. BHP is been filled, stopped out. That's good. Let's not go back in. CBA, 69.50 or $60. Let's see CBA if it's picked up where ANZ left off. Yep, still okay. We'll leave that as is. FMG, we've talked about. Gold Road, the worst section of the Australian market aside from energies. 67 cents. Are they going to put us out of our misery? Not yet. Healthscope, Kevin said there was a new higher bidder come in for Healthscope, so that's good. Probably happy with that. It's not really setting the world on fire, but still there's good things about the chart pattern. Currently stock $2 and we didn't get filled, if I remember correctly. We raised that on Friday. So if we're not out, raise the stop to $2.01. If you're out, don't have to do anything. NAB, we wanted to buy at 24.26. And that was ex-dividend, if I remember, hopefully, question mark. We will wait. Paladin, 18-cent stop. Uranium has been falling it, doing well. Will Paladin actually survive up here? We're going to raise our stop loss up to 19 cents, just in case it doesn't. Rio, 80 cents price. We'll look at that. Terracan, break above 60 cents. Nothing doing there. TPM 720 or 785. Nothing happening. I'm slightly in the money. We can probably raise that stop up to 730. Let's put 725. Westpac, we've talked about looking to buy at 26.15. We won't get that till when we get dividends paid. I'm not going to change anything. Wesfarmers, $45 is the stop. Now bring that stop up to $46. And here endeth the lesson. Have a good one, everyone. Bye.